Hi everybody, it's Marcus Collins from MA Properties with your October market update for the town of Lexington. We do those most months. We're kind of coming towards the end of the year, so we've got a lot of information to tell you about what's happened throughout this year. And now I think we're in a good position to tell you what's happening, or going to happen, I should say, in 2024. So hold on to the end. That's when we'll give you our predictions for what we expect to see in the rest of 23, but more importantly now, given we're here in October, what's going to happen in 2024. So let's get started, shall we? Relatively easy to get information today, but it's much harder to make sense of it. And that's specifically the case today because there's clearly a lot happening in the market, a lot of external factors happening in the market. We're really in a situation that we've really not been in before. So much more difficult to make sense of it, and you'll see that as we go into some of the details moving forward. I'm going to show you lots of information today, and it's available if you want to look at other towns in a couple of different places. First of all, a great place to go is start off with our website. If you go to maproperties.com, statistics, you will find lots and lots of statistics. The screen looks similar to what you see on the screen today. Lots of information there for about 50 different towns. So not just the town of Lexington, which is what we're going to focus on here, but also for most of the towns within 95 and to some extent within 495 too, in a kind of centered around about the Lexington, the Route 2, Route 3 corridor. Specifically around Lexington, you may have seen a booklet like this delivered in the mail back in January, where it tells you what happened in 2022 and then kind of unpeeled what we anticipated to happen in 2023. We're in the middle of kind of getting ready to produce the 2023-2024 versions, but this is there. If you want to have a look at it to see how good we are at predictions, I guess. We have copies on our website. We have hard copies as well if you want to take a look, but lots of information in this booklet, and we're going to produce it again this year. If you live in Lexington, you will probably see it in your mailboxes towards the end of January, mid to the end of January. If you don't live in Lexington, you like a copy, it'll be on our website, or just reach out to us and we'll be able to give you a copy of the 2023-2024 version. Okay, so what are we going to talk about today? I'm going to break it down into 4 different areas. We're going to go into quite a lot of detail. So hopefully we'll cover what almost everybody's interested in, I hope is anyway. We look at single family homes, the biggest part of the market here in Lexington, of course. Breaks down the luxury market, and we define that as any home sales greater than 2.5 million. We'll look at the new construction market, that's relatively large here in the town of Lexington, as many of you will have seen. And then we'll take a look at the condominium market. Then I'll give you a sense of what else is happening in the market, not just interest rates, and that will be there too, of course, and a little bit of some thoughts around where we are in terms of where interest rates are going to go. And then we'll kind of break out the crystal ball and see what we anticipate for the rest of 2023, but much more importantly now, 2024. All right, so let's delve into single family homes. You're going to see lots of graphs today. Most of it's around trends, so don't necessarily look at the details of what you'll see, but it's about the long-term trends because that will really tell us what we anticipate to happen in 2024. So first graph is inventory levels. That is how many homes are available to buy. I do this on the first of the month. So the first of every month, I go out and I say, how many homes are there available to buy? As you can see, it's relatively cyclic. No surprise, we have winters here in Massachusetts, of course. The dip in the inventory level is really the December-January timeframe when any homes that haven't sold usually expire off the market or are taken off the market and then come back on in the spring market. As you see, it's relatively cyclic. We did see, if you kind of focus, if I can use my toy here, yeah, sorry about that, yeah. Numbers around about 120 in the kind of May timeframe, dipped in 2018, 2019. If you can remember back to pre-COVID, there was lots of discussion then about a recession or a housing correction. Nothing came of that because, of course, along came COVID, no surprise. This is COVID, this time period here, 2021. And then as we come forward to 2022, 2023, you can see a relatively low inventory level. You'll also note that there's no dip between 2022 and 2023. We'll have a lot more to say about that because that's having quite a major impact on the market today, why there was that kind of dip. But as you can see, second half of 2022, high inventory levels, guess what? Interest rates started to rise. Buyers were somewhat reluctant to buy. Sellers were kind of still out there in the market. They put their homes on the market. The buyers were kind of taking back a little bit. And then we end up with relatively low inventory levels in 2023. Now, normally when we see that, we ask, is it lack of sellers or is it too many buyers? Basically, buyers buying everything that comes on the market. Little different in 2023. So this is the number of home sales. 2020 and 2021, really the anomalies, that's COVID. That was driven by COVID. A large number of sellers putting their homes on the market where they lived didn't work for them. They didn't need to commute into Boston anymore. The home was too small. All those kind of lifestyle changes that COVID brought about really did drive the housing market to some very high levels in terms of the number of transactions. But then it dropped off in 2022, high interest rates. And as we can see here, it's dropping off again in 2023. To explain the different colors, the blue is existing homes, green is new construction, and the kind of orangey color are the off-market teardowns, homes that were bought off-market by developers and then were converted to new construction. The red bar is what I anticipate will be the homes that will, in this case, sell in the rest of 2023. So the total graph there, which is around about 300, that's the total number of sales we anticipate in 2023, which, as you can see, is probably about 50 homes less than we saw in 2022. So lack of number of home sales driven primarily by a lack of sellers. Also, some reluctance on the buyers, and we'll talk a bit more about that in a moment. But we're not seeing that many homes coming on the market, and we're seeing buyers kind of pulling back a little bit. You can see this as, again, using the cumulative numbers, 2023 versus 2022. You can see that we've been down. We actually tipped a little higher in that kind of May timeframe, but overall, we've been lower in terms of the number of sales in 2023 versus 2022. And remember, 2022 was much lower than we saw in those kind of COVID years. So lack of number of home sales, sellers being somewhat reluctant to bring their homes on the market, buyers being somewhat reluctant to buy, and what that means is the number of days on the market is increasing. Normally what we would expect with a lack of inventory, lack of number of sales, is that we'd have increased competition from the buyers, which would drive prices higher, but also the speed with which those homes sold would actually decrease. And you can see that in 2021, 2022. It's increased from 24 in 2022 to 37 in 2023. And I'd anticipate that would go a little higher. We tend to see a slower market in the kind of fourth quarter of the year. And so I'd expect that number to probably reach 40 perhaps. So not quite double where it was in 2022, but pretty close. Another ratio that we look at, and it really is a good indication of buyer sentiment, is the sale price to list price ratio. So imagine a home comes on the market for $1 million, sells for $1 million. That's 100% sale price to list price ratio. Historically, Lexington was around about 100, 99, 100, 101. That's kind of where it was. It rose dramatically with that increased demand we saw during the COVID years, upwards of 106 and 107 on average. But that's now dropped back to 102. Still more than 100. And again, I would expect that number to dip down perhaps a percentage point or so as we kind of finish off the year. But clearly much lower than what we saw in the 2021-22 and back to the kind of historic norms that we saw in the rest of the 2000s, so 2013 to 2020. If we break it down month by month, You can see it hasn't really changed very much. It is beginning to drop off here in August. That's the last month I have some meaningful data for. You can see it is beginning to kind of drop down. And that's why, as I mentioned before, that rate, we would anticipate that ratio would come lower as the year progressed. But what's interesting here is to look at, and this is kind of going back to that, why was there a lack of dip in the inventory levels at the turnover of the year? If we break out new construction versus existing homes, so existing homes is the blue bars, new construction is the green bars, you can see that new construction is selling for a much lower sell price to list price ratio than our existing homes. And what's happened here is that over that kind of end of year time period, 22 to 23, there was a large number of new construction homes that didn't sell. What that meant is developers essentially have to sell. Homeowners can remain in their home until the market kind of corrects, if you like. Developers can't, they have to sell. And so what we've seen is that developers are being forced to reduce their prices as the excess inventory in new construction kind of sits on the market. And that's what you're seeing there. And you'll see that in some of the information, some of the other data when we look at average sale prices, for example. But we do see that kind of dip in that sale price to list price ratio, probably 5, 6, 7% lower than we get for existing homes, just because the developers are forced to sell because that's what they have to do. In terms of the average sale price, slightly higher than we saw in 2022, but remember here, thinking back to that new construction, we had a lot of new construction homes that didn't sell over that 2022-23 transition. They sold in 2023, and they tend to have a slightly higher price than existing homes. Existing homes averaging about 1.8 or so, new construction homes about 2.8. And so what that excess of new construction selling, even though they were selling at a 95% sale price list price ratio, is kind of dragged up that average. So there's a little bit of skew in the data here that we really, if we were to break out new construction versus existing homes really haven't seen very much price appreciation during 2023. And in fact, as we're coming into the latter part of 2023, it's likely that we will see some slightly price depreciation throughout the rest of this year. I split it out a little bit because remember there's the mortgage interest rates rose most dramatically in 2022 second half, and you can see that here. We saw a relatively large drop in the average sale price, remembering not much new construction sold as well, though that wasn't there to skew it higher. And so we did see a drop in that second half of 2022 in terms of the average sale price. It rose in 2023, but as I say, some of that is a skew that we are getting because of the number of new construction homes that are selling, which sell for a higher price. Medium is slightly higher, not by very much, of course, about 100,000, but that's the median sale price. So single family homes really dominated by not that many homes coming on the market. The homes that sat on the market over the transition, primarily a large number of new construction, actually selling in 2023, but at a lower price than they would have in 2020, certainly the first half of 2022, as developers are forced to sell and start diminishing some of that excess inventory we saw over that 2022-2023 timeframe. All right, luxury. So we define luxury as 2.5 million and above. So home sales, first of all, let's take a look at that. You can see it really did begin to rise in 2020, the number of home sales, but really took off in 2021 and 2022. In some respects, actually outperforming the market as a whole, in fact, outperforming the under $2.5 million price point as well, actually. So a lot of new construction homes, luxury homes, about 55 sold in 2022. We'd anticipate that there would be a large number that will sell this year, but not as strong, perhaps 5 homes less. So certainly the luxury market doesn't seem to be impacted by the mortgage interest rates as much as the market in general. So that's interesting as a kind of point to think about. We anticipate here, about give or take 50 new, luxury homes will sell in 2023. Still, I'd say a large number, but certainly slight diminished from what we saw in 2022. Days on the market, guess what? It's right, it's risen again. Some of this is because of that new construction. Remember, about 50% of the luxury market is new construction, just over. And so new construction homes sitting on the market longer, having to take a lower sale price to list price ratio, means that with the average days on the market for the luxury has grown from 40 to 80, so it's just about double. And here's that ratio again, that sale price to list price ratio. You can see very strong, certainly far stronger than we've seen over the last 2022. 23 was strong, 2021, 2022 was strong, but 2023 much lower, down around about that 95%, dominated by the excess inventory in new construction. That has to sell, and therefore the developers have to reduce the prices in order to sell. Interesting to look at the price distribution. I've done it for the last 4 years. Here I break down how many homes sell in price brackets: 2 to 2.5, 2.5 to 3, and 3 plus. And so you can see the price band which has seen the biggest reduction is that 2.5 to 3. The number selling in the 2 to 2.5 is about the same, and 3 plus is about the same, but it's really that $2.5 to $3 million price tag that's seen the biggest reduction in the number of home sales. So that's kind of the luxury market. Now let's turn to new construction. This is the number of new construction sales. One more area, let me explain the colors. Blue is the new construction homes. The red there, the 8 homes, is my projection as to how many will sell between now and the end of the year. And then the yellowish color is the excess inventory. That is how many homes will be on the market at the end of the year unsold. Remember, the market in 2022 was dominated by, the end of the year was dominated by that excess inventory. Developers building too many homes than the market could absorb. And we see exactly the same effect here in 2023. We see a large number of new construction homes that simply won't sell. There just are not enough buyers around at those price points to be able to buy all of the new construction homes. And so it looks like we'll get a similar effect in 2024 that we saw in 2023. Because that 20 homes that I'm projecting will not sell in 2023, guess what? They will still be on the market in 2024, and the developers will be forced to reduce their prices, that sell price to list price ratio, in order to sell those homes. So it looks like we're seeing that the effect that we saw at the end of 2022 into 23 will be very, very similar, if not exactly the same, as the effect between 2023 and 2024. That is, we'll see a larger number of new construction homes unsold, and the developers being therefore forced to reduce prices in order to sell those homes. Sell price to list price ratio, no surprise, much lower. Again, back to that, developers being forced to reduce prices in order to sell them. And it's now, from about 100% over the last couple of years, it's now dropped to about 94%. And that's all being caused by the excess inventory in 2022 into 2023. And as I say, it looks like it's going to pan out in exactly the same way as we come to 2024. Sell price distribution, very similar actually to what we saw with the luxury market. No surprise actually, because the luxury market has a larger number of component of it is new construction. But it's really that 2.5 to 3 that's seen the largest reduction in the number of home sales. So it's kind of just following on what we saw at 2.5 to 3 is really the weak part of the market, if you like. There just are not enough sales. And that's where the excess inventory is. Because if you now look at the average new construction price, that's the blue line here, you can see it rose rapidly between 2019 and 2022. It was about 2.9 million in 2022, but now it's reduced to under 2.8 million in 2023 year to date. And that will probably dip a little lower, slightly lower probably, as we kind of finish off the year. The other information you see there, the kind of orange bars, are the number of off-market teardowns. It was low in 2022 just because the new construction homes simply didn't sell, and therefore I don't have insight as to whether that was a teardown or not a teardown. So that's why we see a low number of teardowns in 2018. It would have been much higher had those new construction homes sold. They didn't, and therefore the number of off-market teardowns shows a low here. They did sell in 2023 at a lower price, of course. They had to bring their price down in order to sell. And that's why you see a higher number, although again, not as high as we've seen in 2019, 2020, and 2021 within 2023. The red line here actually is the average price being paid by a developer for an off-market teardown. And what's quite interesting here is to look at the difference in the trend of those two lines. We saw a large increase in the number of in the price of new construction homes. That didn't show itself in terms of the amount of money the developers were willing to pay for off-market teardowns. It's remained about 800,000 for the last 5 years, whereas new construction prices have gone from 2 million to 2.9, back now down to 2.8. So we've seen a much higher increase in new construction price, and that's really not being shown, or not being, the benefit of that is not being seen in terms of those off-market teardowns. So that's something to think about as you think about whether your home is a teardown. The price appreciation we've seen in new construction will not be shown in terms of what the developers are willing to pay for those off-market teardowns. And we may well see, with the new construction price beginning to decline here, as we see excess inventory, we may see that number paid for off-market teardowns begin to decline as well. So we'll watch that space in 2023, 2024. We've talked at length about the downsides of selling directly to developers, and you can see that in the data here. And to say it seems likely that as we go through into 2024, we're going to see that downward pressure on new construction prices because of excess inventory, and that will manifest itself with a downward pressure on the off-market teardowns too, teardown price too. Condominiums. Condominiums market is kind of split between new construction, would sell for a much higher price, and the existing condominiums. And by that I mean Potter Pond, Drummer Boy, and so on, which tend to sell for a lower price than the new construction developments. So condominium sales, first of all. So the blue is existing condominiums, let's say Potter Pond, Drummer Boy, and so on, whereas the green is the new construction condominium developments. Usually in developments, there's not usually one or twos. They're usually relatively large, 10 new construction homes. So you can see here that the number of condominium sales is lower than we have seen in 2022. But if we back out that new construction development, we're slightly lower. Looks like we'll be about the same number of existing condominium home sales. So not that weakness that we've seen in the single family home market. We are seeing condominium sales running at about the same level as we saw last year, although slightly lower than we saw in 2021. Days on the market, actually slightly lower. Remember, it was much higher. It was almost double for single family homes. It's slightly lower, around about the same number, a few percentage points lower in terms of days on the market, 19 versus 25. So we're not seeing that weakness in the market within condominiums that we are within single family. It's a much smaller part of the market. I should add that, but we're certainly not seeing that kind of weakness. Remembering, of course, that they're at a lower price point. That has some bearing into this as well, of course. In terms of that average sale price to list price ratio is a great metric of buyer sentiment. 103%, around about the same as we saw last year. It'll probably drop to about 102 as we get through to the end of the year, but certainly much higher than we've seen in the single family home market. So that's kind of interesting to look at. In terms of prices, here I've backed out the new construction. They sell at a higher price. It does tend to skew the market, the average price, and so I've backed that out. And as you can see, whilst average sale price is slightly higher, it's not higher by very much. It went from 853 to 876. So there really isn't a big difference, and that may well dip down a little bit as we get through to the end of the year here. So almost flat price appreciation in terms of the condominiums market. So what's happening in the market that's causing this kind of this effect that we're seeing? So unsurprisingly, the first one, of course, is mortgage interest rates. This is the mortgage interest rate from 2000. You can see here we are in, towards the end of Q4 2023. We're at about the same level we were in the early 2000s. It's about 7.5%. That's a big rise over a relatively short period of time. And in fact, if I kind of break this down, looking from 2000 to 2023, you can see that it's risen quite rapidly latter half of last year. But actually, and here's the really interesting piece, it's continuing to rise. We were anticipating, and I've been following the projections of where this should go, and the projections are always that it's going to go lower, it's going to go lower, it's going to go lower. But that actually isn't the case. In fact, week after week, mortgage interest rates are still rising, and in fact, they went over 7.5% last Thursday. We get the information on a Thursday. So there is no, from a buyer's perspective, some except from a seller's perspective, there's no kind of light at the end of the tunnel. Nobody really knows when those interest rates are going to start to decline. Let me give you the best numbers that I could find, or at least some numbers that I could find. The projections come from the Mortgage Banker Association. So in this case, the blue is the actual mortgage interest rates. I've broken down 2022 by quarters, 2023 by quarters, and I've shown a couple of quarters into 2024. Best we can see today, we will anticipate these high levels of interest rates through 2023, through Q4, where we are right now. And the hope, and I call it a hope because I'm not sure there's much accuracy to these numbers because I've been watching them and they react to what's happened in the prior month. They're not a great indication of where it is going to be. But looks like that we may well get interest rates below 7% as we get into the middle part of 2024. So in terms of the buyers out there, and some of the sellers, what they're looking for is that rate to begin to drop. Their worry is that rate will continue to increase. And if I go back, that's a valid worry, because we have seen those interest rates continue to rise month after month, week after week, when everybody told us by the end of the year it would start to decline. And clearly it's not. We're at that 7.5%. So buyers and sellers are looking at those interest rates, saying, I don't see any respite. I don't see that trend coming down. And I have no insight really, with the exception of what MBA comes out with. I have no indication of when those rates are going to come down. But it's pretty clear they're not going to come down to the levels that we would like them to be, perhaps 4 or 5%, which is when it will start to kind of liven up the market. Prior to this rise, the best that I could find was that once mortgage interest rates rose to about 5.5 to 6%, it would start to have a negative impact on the market. They were right. But that gives us a sense of when is the market going to react positively. If we use those same numbers, I think it perhaps a little high, a little low for that. But I think once we see that trend coming down, once we see us down to 6.5, then and we see a continual decline in those rates, then the buyers and the sellers will think, okay, now I can see some light at the end of the tunnel. Time to come into the market. Maybe I can do a refi and chase the rates down. Maybe I can get an arm and chase the rates down. But we're not there yet. And I think that's what's having an impact on the market today, is that buyers and sellers don't see and have no indication really, apart from an estimate at best, of when those rates will begin to decline. And certainly what everybody's been saying all along has proved to be wrong. Rates are still at a very high level, and it looks like they're going to remain well over 7% through the rest of the year, if not into Q1, Q2 next year. So that's one effect on the market. I mentioned before about the new construction market, and I hinted that there was something going on in that dip. And if I kind of highlight it again, you can see the big dip in 2021 to 2022. There's no such dip in 2022 to 2023. That high levels of inventory over that transition was caused by new construction. Those new construction homes must sell. They have to be sold. And therefore, as I showed you this graph before, the price of those new constructions was declined, or at least the price that the developers were willing to accept was actually much lower than it's been historically, and much lower than existing homes, because the buyers who are in their home could potentially stay for another 12 months, maybe even longer. The challenge is, we haven't kind of got rid of that because we're in exactly the same position at the end of 2023. There are far too many new construction homes that are going to sell. And so that's going to play out in terms of 2024. Those homes are going to remain on the market. Prices are going to have to decrease for those homes to sell. And so it's very likely that we'll have a very similar picture when we look now at the beginning of 2024. So let's kind of get the predictions out. Let's have a go at where we think the market's going to go in 2024. So I like to break this down, sellers versus buyers. So let's look at sellers first of all. There's clearly a reluctance of sellers to sell, because specifically in terms of move-up sellers, because you're swapping a mortgage today at perhaps 3 to 3.5% for a mortgage that will be at 7.5%. That's a big difference, almost double. And so many sellers are staying put, specifically the move-up sellers. I'm going to stay where I am because I don't want to pay those high interest rates for my new mortgage. I'm going to wait for interest rates at least to show some intent to come down before I'm going to put my home on the market. And that's why we saw low levels of listings this year in comparison to what we've seen previously. It was that sellers were reluctant to put their home on the market. Now, that clearly doesn't impact downsizers, who in many cases are not financing their next home. Relocation, people who are being relocated, and those two groups really dominated the market this year in terms of sellers, where they had either the requirement to sell or some discretion because they didn't worry too much about interest rates, because guess what? I'm going to move from an expensive home to a cheaper home, or less expensive home, perhaps the right way to put it, and therefore I'm not even going to bother with the mortgage. So I'm not impacted at all by the interest rates. Now, 2024, the challenge is there's pent-up demand here, and to some extent it's a little bit like COVID, or clearly not the same effect as COVID. There is pent-up demand. There are sellers out there today who really want to move. The house isn't big enough. It doesn't meet their requirements. They want to sell, but they're reluctant to because of interest rates. And really, the degree to which they will bring their home on the market is really driven almost exclusively by the mortgage interest rates. If we see intent on those and we see some reality in terms of those coming down, estimates are all very well, but I want to see them actually coming down. That will bring more sellers into the market, which will be a good thing because we're at a level today which is very low. Now, rates are projected to fall, but they look like they're going to fall quite slowly. The decrease is going to be relatively slow. And so it's likely, given that we're also going to have that excess new construction inventory on the market too, it's likely that we'll see the same number of sellers, same number of listings, same number of sales probably in 2024 that we saw in 2023. Now, if interest rates decrease down to 6%, that will change that picture. But all the indications today is that seems very unlikely. And so I'm projecting that we'll see about the same number of home sales in 2024 that we saw in 2023. Now, ordinarily that would be a good picture, except buyers are impacted by those mortgage interest rates too. They clearly, how much money they can, or how expensive a home they can buy, is a function of what the mortgage interest rates are. And we've definitely seen, certainly looking at open house attendance, a lot of requirement, a lot of demand, but that isn't necessarily showing itself in terms of multiple offers. Lots of people through an open house. We did open houses last weekend, and we had 72 potential buyers through those open houses. Now, what will that mean in terms of the number of offers? It's likely to be in single digits, perhaps even the ones or twos. And so there is, as with the sellers, a lot of demand, but they're being constrained by those 7.5% mortgage interest rates. And in fact, because they're still rising, we've seen a number of buyers who've got a pre-approval at 7.1 when it came to actually put an offer in on a home and they got their final rate. What they were finding is that it was actually much higher and they've been unable to buy the home. And so there's been some buyer's remorse, if you like, not so much in terms of, oh, I'm having second thoughts about the house. It's, I'm having second thoughts about the rate because actually it's much higher than I was told when I got my pre-approval 6 weeks, 8 weeks, 9 weeks ago. And so that's been a big factor this year that we haven't seen certainly in the past. And so even though we've got less homes being listed, we've got a large degree of reluctance in terms of the buyers in this market. And similar to the sellers, there's a lot of pent-up demand. As I say, open house attendance is very high, but until interest rates show that kind of downward trend, I think we're going to remain in a very, very similar situation to where we are in 2023, in 2024. So 2024 looking very similar to where we are in 2023. If interest rates do begin to come down, substantially, he says, maybe a percentage point, 6.5%, 6.3% middle of next year, that will clearly bring many more buyers, given that they're already out there looking for homes, but actually will give them the ability to buy. So that's really the market. Very different market than we've seen in the past. And sellers are, in some cases, reluctantly, but beginning to come to the realization that the buoyant market with high price appreciation has really come to a halt. It came to a halt in the second half of 2022, and we've seen low levels of activity, buyers not really able to bring that house price appreciation up, bring up that sale price to list price ratio, just because of those high interest rates. What should sellers do? What should buyers do? For buyers, to some extent, now is a good time clearly to be in the market. There are sellers who have to sell, want to sell this time of year. So, continue to look. Don't anticipate there will be a lot of excess homes or new homes coming on the market. That is what it is. In terms of sellers that need to sell, be realistic. This is not the market that we saw during COVID. Far from it. It's very much like we saw in the second half of 2022. That buyers, whilst they would like to buy homes, are actually constrained by their ability to repay, essentially. And so it's very much a different market. If you're looking to sell your home, pricing is key, right? You need to price realistically. We are seeing homes coming on the market that are priced way, way too high. That's just not reality today. Maybe it was in the past. In many cases, it wasn't clearly, but perhaps you could have got away with it in the past. Today, you absolutely cannot. You cannot overprice your home. Buyers are struggling to buy as it is. If you overprice, we can say with almost 100% certainty, that home will sit on the market. And it will now sit on the market until spring 2024, when hopefully interest rates have come down. But right now, the projections are that if they have, they will not have come down. So that's where we are. It's clearly a very different market than we've seen previously, but something that people just have to kind of come to terms with at the end of the day. So thank you for that. Hope that was informative, and the information, as I say, is out there on the website if you want to take a look for yourself in terms of what's happening in the market. emeryproperties.com statistics, lots of information, not just for Lexington, but for other towns too. I'll try and do another one of these in mid-December, to give us kind of sense of where we've got. By mid-December, we will have kind of got 95% probably of the home sales in. Then I'll be in a position to put that market review together, 2023, 2024 market review, and you can expect that to be in mailboxes towards mid-end of January. I think it's fair to say I'd be cautious about putting your home on the market quite yet. Wait till you've seen that. There's going to be lots and lots of information in that. Let's say mid-end of January is when that document will come out. So with that, I want to thank you for listening. Hopefully it was informative. If you have any questions, please reach out to us. We love talking about this, as you can imagine. So we would love to hear what you have to say. So with that, I will say thank you very much and bye.